Have you ever wondered what really happens behind the scenes in OTC over-the-counter trading? Why are so many traders drawn to it? Is it the promise of higher payouts or something else? When you trade OTC, you're not dealing with the usual market conditions. So what's the catch? How does the market behave when it's outside the typical exchange framework? And most importantly, can you trust the signals, or is it all just a game of chance? Today, I'm diving into OTC trades. Watch closely, because I'll show you how to navigate this high-stakes game where the rules are always shifting. So, we are with the broker, and on the balance, you see $100. From this amount, we will increase our deposit today, and I am confident we will make a good profit. Today, we are using the Bollinger Bands indicator along with two oscillators, CCI and RSI. For the settings of our indicators, we set the period of the Bollinger Bands to 13 with a deviation of 2. The RSI period is set to 5, and the CCI period is set to 10. These are the most optimal settings for trading on the 1-minute time frame. I have selected currency pairs with the most optimal volatility and movement, and today we have high payout percentages since the market is OTC. Overall, it's a simple strategy for today's session, and during my trading, you will understand how to correctly use this combination of indicators and oscillators. Let's get started and pick the first currency pair. Let's open a position for a downward move. We found a good entry point right away. There's a resistance area touch and a new price maximum is formed. Here's the first and second touch of the upper band of our channel indicator. Then, the price movement should go down. We're not just guessing this, we can see an exit from the overbought zone, which is why we opened the position for a downward move. Even though we didn't open it at the most favorable level, we're confident the price will correct, so this trade should close in profit. Let's watch the result. Our first trade closes easily in profit. As I said, the not-so-ideal entry level didn't stop us from closing it in profit, and that's exactly what happened. This is how we open a downward position. Based on this principle, exit from the overbought zone, touch of the upper band of the indicator, and entry for a downward move. Let's pick the next currency pair. Let's open a downward trade here as well. This is a good entry point. We can highlight the price corridor, marking the resistance area. There's a touch and formation of a new local maximum, followed by a touch of the upper moving average of our channel indicator. I also want the exit from the overbought zone to happen on both of our oscillators. The entry principle for this trade is exactly the same, and you can already see the movement result. Let's watch for the trade completion. And the second trade also closes easily in the positive. Let's change the amount. And now let's try to open a trade on the rise. We'll pick the next currency pair. Let's open a trade for a decrease here. In general, I think you understand the principle for entering this trade as well. The downward trend is stronger, and the chart has a more flat mood. The price doesn't have a clear trend, but the principle is absolutely the same. Firstly, the price touches, forming a new local maximum after the price correction, and then we observe and hope for an exit from the overbought area. That's why we're opening a trade for a decrease here. Let's watch the result. And the trade also closes easily in the positive. As you can see with this strategy, you can easily understand when a price correction will occur and play on it. It doesn't matter much whether your trend is upward or downward. You'll either open trades against the trend or with the trend. In general, this strategy easily adapts to any market movement. Let's continue with our trading and select the next currency pair. And here, we will also open a trade, again on a downward trend, but we are opening based on the same principle. What enhances our setup here is the resistance zone. With a third touch point, the price touches the upper band of our channel indicator, the price is moving down, and we also see an exit from the overbought zone. All of these factors are the same as in the previous 4 or 5 trades we opened. Let's watch the result, 25 seconds remaining. Trade went to 0, so we're opening the second one right away. The exit should happen, so we're not overthinking it and opening our second trade. Let's watch the result. I believe the exit will occur. As you can see, the second trade has already closed in profit, the pullback formed, and the exit occurred exactly as expected. Initially, we had a slight upward impulse which caused the first trade to close at break-even. A bit of bad luck, but as you saw, I immediately opened another trade, and the pullback happened as anticipated, closing the trade in profit. Now, let's open 2 trades of $675.00 each. Let's move on and pick the next currency pair. Here, once again, I can't resist but open trades for an upward movement. We're opening according to the overall trend direction, expecting the price to go up. Let's highlight the working area finally. We managed to open the trade for an upward move, a good touch point, the touch of the lower Bollinger Band's line. After this, the price should move upwards. It's not just by chance, of course. This is an exit from the oversold area. That's why in this case, the trade is opened for an upward movement. Let's watch the remaining result. And the trades close easily in the positive. Let's open 3 trades with a sum of $25.99 each, using the entire deposit. We'll try to find another upward trade. Let's begin and pick the next currency pair. And here we will open trades to the downside. It's a good entry point. Even though the trades weren't opened exactly at the same point, I still think the exit will happen. We have a touch of the resistance area as well as the upper moving average. Also, all of our oscillators are in the overbought zone, so there should be a price retracement and the trades should close in the positive. Let's watch the result. As I said, the retracement happened and our trades closed in the positive. Let's go ahead and open 4 trades at $1,000 each to solidify the result. I think we're fully satisfied with the outcome, so there's no rush. Let's do a thorough analysis and open the final trades. Let's proceed and choose the next currency pair. Here, we will open our final trades, and we are opening them again on a downtrend. These trades are opened based on the same principle as the previous ones. Let's highlight the working area. We've had a breakout of the resistance zone, the formation of a new local maximum, a touch of the upper Bollinger Bands, and I will expect an exit from the overbought area on the RSI oscillator. Let's observe the result, about 20 seconds remaining. And our trades close in the plus. A small pullback happened, but we opened at the right time, at the peak of the shadow, and our trades ended in the plus. Let's proceed with the withdrawal and finalize our trading. We'll choose the wallet, and the amount will be $8,600. The operation is being processed successfully. This is how today's trading went on the OTC market, a rather volatile market. Overall, the strategies, as I mentioned, handle opening trades both in the trend and against the trend. Thank you all for watching this video. Good luck with your trading. Don't forget to subscribe to my YouTube channel, like the video, and leave your comments. Best of luck, and goodbye. And that's a wrap for today's trading session. But did I make the right decisions with each entry? Could I have taken even more profit from the market? How do you think the next trade will turn out if I follow this strategy again?